When you start a business, you manage everything yourself. As your revenue grows, your finances get more complicated, take up more time to handle, and become riskier if you handle them incorrectly. So instead, as you reach certain milestones, you should treat your financial team as an investment. They will have long-term returns for your personal and your business wealth. But doing so too early can also minimize the returns that they give you. So in this video, I'll not only tell you what professionals to look for and how to evaluate them, but also what stages you should be hiring each of these types as your business gets bigger. One other caveat is that none of these people should be joining your payroll. All of them should be independent of your business. And that ensures two things. First, that they are fully entrenched in the work that they do, so they should be good at it. And two, it makes sure that they stay cheap. You don't want to be paying hourly wages for people that you also have to pay payroll taxes and benefits and who may not even be cut out for the job to begin with. The first stage is when you're under $50,000 in profit. You don't really need a full financial team. You really just need someone to prepare your taxes. Now, this could be just a tax preparer, it could be a CPA, it could be an EA or enrolled agent, but here's why you don't want to just use something like TurboTax. TurboTax is fine when you're just inputting a couple of W-2s, if not just one. But when you run a business, things are just a little bit more complicated and complicated enough that it might make sense to have an actual person looking at what you're doing. And more than that, a tax preparer who's not a CPA or an EA is probably not that much more expensive than TurboTax. So you do get the touch of having a person look at what you're doing while actually not having to pay that much more out of pocket. But as I said before, if you're at $50,000 in profit, then this is probably enough. You aren't making enough money where anything else is really in danger. Now, stage two is when you cross that six-figure mark, $100,000 in profit. At this point, your time is now becoming more valuable than your money. And one of the biggest time sinks that people fall into is bookkeeping. Now, this is when people are tempted to just bring someone on hourly or use somebody who they may already have on staff and pay them to do their bookkeeping. But here's why you don't want to do that. First, if you hire in-house, you also have to pay payroll taxes and any benefits that you would normally give an employee. Now, this is minimized if it's a purely part-time position, but here's the other problem. Usually people who are either in a part-time position or already at your company probably are not the best at bookkeeping. And if you're making $100,000 or more a year, you need someone who's actually good at what they do for a couple of reasons. First of all, accurate bookkeeping affects your taxes. Keeping track of your expenses and deductions is a really big part of that. Two, having a good bookkeeper also protects you against audit risk. If you were to get audited by the IRS, or even if it's something as simple as just applying for a loan or a line of credit, and someone wants to see your books, having your books done professionally is a very important part of making sure that goes smoothly. And the other benefit is you have clarity in your business numbers. Someone who does this for a living is going to be able to give you access to reports and statements and documents that you'll be able to look at and know how your business needs to expand, maybe the ways that it can improve or cut down, and ultimately you can build a strategy based on some of that information. And at this stage, your tax person that we talked about before does probably need to be a CPA or an EA. The reason is because someone with one of those two designations can represent you legally to the IRS in case you get audited. There's two reasons that's important. Someone with one of those two designations can either represent you to the IRS if you get audited, but they can also give you tax advice. A tax preparer, and even the person in the next category that we're going to talk about, can't actually give you tax advice. So while it may cost a little bit more money to have someone with one of those two designations in charge of your taxes, it will pay off in the long run with the amount of deductions and the amount of things that you'll be able to do in order to reduce your tax bill and be prepared in case the IRS audits you. Now, stage three is anything above $250,000. This is where you want to have a financial advisor. Now, I mean something different than what most people mean when they talk about a financial advisor. Most of the time, financial advisors are meant to help people save a little bit of money, put money in the right accounts, and then manage the portfolios of those accounts. There might be a little bit of planning as far as legacy, how you leave money to your kids, but overall it's pretty simple. But you run a business. Things are a lot more complicated, and you probably have two other financial professionals that are already working with you. So this financial advisor needs to do a couple of things. First, they need to be able to coordinate those two other financial professionals and themselves so that everyone is working in tandem. Two, they need to be able to help you specifically as a business owner with all of the financial problems that you are going to face. This includes things like special retirement provisions, special insurance provisions, special legacy planning. How are you going to get out of your business? How are you going to pass your business along if you don't want to get out of your business? All of these things are complex issues that most financial advisors don't actually deal with on a day-to-day basis, if ever. So don't just hire your parents' financial advisor. Go find someone who actually markets themselves for your particular situation. They will help you with multiple business entities. They will help you with reinvestment strategies. But also, you're probably going to end up avoiding people from big, large name firms like Edward Jones, Fisher Investments, your bank. People from those places are not going to be equipped to deal with the problems that you have. And there's a couple of other concerns that I have that I've stated in a different video. So now that you've got these three people, there's a couple of things that should be said. First of all, these three people need to communicate. I already mentioned that this responsibility really does fall on the financial advisor / planner. They should be working as a quarterback for your whole financial team, and also they will go find other people if you need them. If you have a specific insurance situation, they should be able to go either find somebody or do the insurance themselves. If you have a special legacy planning or estate planning problem and you need to go get a lawyer, they should know somebody and be able to go get that person for you. Once you cross that income level, you should be hiring somebody that can start to make everything simpler for you. The second thing I want to mention is that this does not necessarily need to be three different people. Some CPAs also do bookkeeping. Some financial advisors also do taxes or can do tax advice. In fact, I would say it's not even a bad thing to have one person doing multiple roles because it eliminates some of the need for that communication factor. If you have one person doing your taxes, your tax advice, and your financial planning, then you don't really need to make sure that those two people are talking to each other. It's the same person. But what you do want to avoid is people working in silos, never communicating with each other, and your strategy being fragmented. Now, how do you go about actually choosing the right people for these roles? Well, obviously there's a lot of professional resume stuff that I could get into, and some of that is important, but there's really only a couple of things that are actually going to make or break your team. First, do you actually enjoy working with these people? Do you get along? Do you share some of the same values? Do you actually have fun when you're talking about business? If you're not doing any of that, then you don't need to hire them. You can be really picky with the people that you select. Two, are they talking at you or are they talking with you? A lot of times, people who work in technical professions like finance feel the need to over-explain and think that because they are the expert, and they are the expert, that they shouldn't include you in the conversation. But really, people who are good at their jobs should be gathering as much information from you as possible and then handling the technical side of things to serve all of that. And finally, you want to make sure that you actually trust the person that you're meeting with. Now, a lot of that's dependent on the first two things, but you want to make sure that you could trust your life in the hands of these people because you're trusting all of your money in their hands, which in some ways is your livelihood. Some red flags is if you feel confused after meeting with them every single time, if you don't understand anything that they're saying, or if you feel like they don't understand what you're saying, then you don't have to work with them. You can have really high standards when it comes to hiring these people. Now, know that sometimes the better the people that you hire, they are going to cost more money. Usually, they're good for a reason. So if you're a business owner that's trying to build wealth the right way, like this video if you learned something. It really helps us in the world of the YouTube algorithm. And subscribe for more content like it.